Let's take a look at what the Grayscale Trust is, why it's so severely undervalued. You can buy Bitcoin at a huge discount in their fund. We're going to look at that, look at the fees involved, look at the chance of you getting your full money out of it, and so much more in a minute. And so we're talking about, specifically, we're talking about the SEC, Securities Exchange Commission, the head, Gary Ginzler. He knows Bitcoin very well. He said this week on Jim Cramer that Bitcoin is the only commodity, the rest are securities. But then he went around and denied the request of Grayscale Bitcoin Trust to convert that trust into an ETF. So I want to talk about that now. If you missed the first part of this and you're just tuning in, no worries. Just don't let it happen again, of course. And the way you can do that is pull out your phone right now, put a reminder for this date, this time, this channel. Make sure you're with me each and every week. And if you did miss it, don't worry about it. I got you covered. You can just search Mark Moss podcast, and you can catch me over there. Now, back to what happened. Like I said, the SEC rejecting this. He said that Gary Ginzler, the head of the SEC, said that he wants to protect us because he wants to make sure there's better protection, so there's no market manipulation going on. But the market manipulation, as I was making the case, is brought on by people betting against the price without actually buying the asset itself, a la gold. So let's break into this a little bit. Now, GBTC, Grayscale Bitcoin Trust, it trades at a discount to NAV, N-A-V. What does that mean? NAV is a net asset valuation. So that means that the assets that they hold, so that means that you can buy the Bitcoin Trust for less than the assets that it's holding on its books. Now, why would you be able to buy a fund for less than their net asset valuation? We're going to take a look at that. But what they're trying to do is convert this trust into an ETF, which would then really solve the problem. So it's trading at a discount because there's some problems. We're going to dig into those problems. And if they could convert it to this ETF, it would solve the problem of this discount, why it's trading for less than its market value. Now, like I was saying before, it's an ETF as an exchange-traded fund. Grayscale operates as a close-end fund. And what that means is the new shares can't be created and redeemed in line with fluctuating demand. All right, that's how an ETF functions. So an ETF, basically every dollar in would go to buy more Bitcoin, and when you take a dollar out, they sell a dollar of Bitcoin. But a close-end fund doesn't work that way. They don't buy and sell Bitcoin in line with the demand. In the ETF, they call that a redemption mechanism. And that's how you reconcile the difference between the NAV, net asset valuation, and what the market value is. And basically, like I said, that prevents shares of the ETF from trading at a discount. So it keeps the shares in line with the price at all times. But like I said, the Grayscale Bitcoin Trust is way down. As a matter of fact, you can buy it at almost a 30% discount to their net asset valuation, which sounds like a bargain. And I know some very well-known and respected investors that are buying at this discount. I'm not. Should you? Well, I don't know. Let's take a look at that. So it says this occurs because Bitcoin was added to the fund as new investors demanded GBTC, as demand waned and GBTC was sold. Bitcoin was locked in the fund, but it wasn't sold at the same rate as demand waned, causing shares to trade lower than the net asset value of the trust. And what they're trying to do is if they can convert the trust into the ETF, it would close the discount and then allow the Bitcoin to track the Bitcoin price. And for the investors that are there, it'd be a really good thing because then the investors would be able to get the appreciation of their holdings equal to the size of the discount, which means they would make a 30% spread. Sounds pretty good. That's why people were buying it, hoping that it would get approved and that it would get revalued and they would automatically make that 30%. Now, I would imagine the odds, the betting odds of it getting approved were probably pretty slim in my opinion anyway. I didn't expect it to happen because, of course, Gary Ginzler has denied every single one so far, and I don't see that happening anytime soon. Now, part of the problem with the Grayscale Bitcoin Trust is that it's expensive. So what happens is that they automatically sell 2% of the fund every year as their fee. So like a lot of funds, you have to pay a maintenance fee. So basically for the amount of money you buy, they take 2% of your money every year to manage this fund for you. Now that's right now it's about 35 Bitcoin a day, and they have almost 650,000 Bitcoin, which is a massive number, which means that Grayscale Bitcoin Trust holds about 3% of all the Bitcoin supply, which is pretty amazing. And that's in their another term. It's an AUM, which stands for Assets Under Management. Now, there's other ways to buy Bitcoin in ETFs, like I said, but they're not physically held Bitcoin. So one is the ProShares Bitcoin ETF, and they hold the futures, the Bitcoin futures. So again, it's just betting on the direction, and they charge a much lower fee. So that's something that you want to look at when you're looking at these types of ETFs. They all have different fees. They have different schedules. They recalculate, and it's that small print that can really get you if you don't know what you're getting into. But Grayscale, so the ProShares Bitcoin ETF holds the futures. They're just holding bets. That's it. But Grayscale actually holds Bitcoin, which is good, which is why they wanted to convert into a physically held, because they already have the Bitcoin. They have 650,000 Bitcoin AUM, assets under management. But what we can see when you look at their when you look at who owns all the GBTC, we can see that the largest holder of GBTC is Three Arrows Capital. Now, if you've been tuned into the other segments of the show, I've been talking about Three Arrows Capital, 3EC, 3AC, and how they're caught up in what I'm calling the great unwind. So Terra Luna went down, and it starts dragging everyone else down with it. Then we saw Celsius go down. Now we're seeing Three Arrows Capital going down, etc. And Three Arrows Capital, which just missed their payment, so they just got marked insolvent. They're being liquidated. They are the largest holder of Bitcoin inside the GBTC Trust. And that's a problem, because as they're being liquidated, people need to get access to those assets, but those assets are held inside the trust, and the trust isn't liquid. It's a big problem. They hold about 38 million shares, equating to $530 million, or 75 times the average daily traded volume of $7 million in GBTC. So that's 75 times the average daily traded volume. So that means it's not liquid. How do you get $530 million out of something that only trades $7 million in a day? And the answer is you don't. Not very fast anyway. Now, the problem is that Three Arrows Capital was ordered to liquidate all the remaining assets. They're being liquidated. They can't meet the margin requirements. They're being called. They were ordered by a court in the British Virgin Islands to liquidate all the remaining assets, totaling over $1 billion, which is good. But the problem is that the Grayscale Bitcoin Trust isn't liquid enough for Three Arrows Capital, 3AC, to dump all its holdings. Now, they could try. It's not going to go very good because it's not liquid enough. And if they did, that would lower the price of the trust, and then it would cause the gap to grow even wider. So what's going to happen? Well, I'll talk about that and more. Talk about that, the implications of this ETF conversion. Talk about some things that you need to know if you're a holder of the trust, or if you're considering being a holder of the trust. And then we'll look back a little bit more about the lawsuit that's going to happen between the trust and the SEC.